I said, hey, the market kind of immune to this tariff talk right now, y'all. It's not reacting the same way. And what we done heard 2 days in a row where the market talked about tariffs, and it still went up. Hey, run that reciprocal tariff from where we explain that. I got a video for y'all. Let's run that.
The big money is coming in on April 2nd, from April 2nd.
The next round of President Trump's tariffs will be reciprocal tariffs, which economists say threaten far more countries than his other trade policies.
Whatever they tariff us, other countries, we will tariff them. That's reciprocal, back and forth.
But economists overwhelmingly agree that the move will hurt U.S. consumers with rising prices. Tariffs in general raise the price of everyday goods because companies pass the higher importing cost onto consumers. But reciprocal tariffs will amplify this effect because the policy will raise tariffs across so many more industries.
Tariffs tend to reduce entry by foreign companies. They don't find they're not going to have enough of a market to make it worth the investment to enter that market.
This would reduce the variety and reliability of products available to American consumers. But Trump sees reciprocal tariffs as a way to even the playing field.
Countless other nations charge us tremendously higher tariffs than we charge them. It's very unfair. We have been ripped off for decades by nearly every country on earth, and we will not let that happen any longer.
The idea of fairness never involved a comparison of tariff line by tariff line, because there were just so many more issues on the table in thinking about what is a fair deal.
The U.S. is one of 166 members in the World Trade Organization, and under WTO rules,
you have to offer all the members of the club your best rate, except you're willing to cut these special deals with friends. There is a presumption built into the World Trade Organization that lower rates overall are a good thing, not only for the world economy, but for individual countries.
Trump blames the imbalance in tariff rates for the growing U.S. trade deficit.
China's average tariff on our products is twice what we charge them.
Some economists point to the fact that the U.S. needs to run a trade deficit because other countries want to acquire dollar-denominated assets because those assets have historically been viewed as safe assets.
Some economic experts point to the federal budget deficit as another reason the U.S. consistently has such a big trade deficit.
That is a source of the need for borrowing from abroad.
Economists say they're generally not concerned about the trade deficit because debt isn't inherently bad. It just means the U.S. is borrowing from the rest of the world. But economists do watch the level of U.S. debt overall.
There is a case to be made that we need to reduce consumption relative to our income. How do we do it? Certainly not with bilateral tariffs.
That's because higher tariffs don't just reduce imports, they reduce exports too. When imports go down because tariffs make it more expensive for American companies to buy foreign goods, there are fewer dollars in foreign markets, driving up the dollar's value. This makes American exports more expensive for trade partners, so they buy less of them. In the end, imports and exports both go down, leaving the deficit unchanged. According to economists, another reason why reciprocal tariffs won't reduce the trade deficit is because companies often shift their supply chains to other countries to avoid high tariffs.
We have reduced our trade with China, but we still need the things that we used to get from China. Companies that make footwear have turned to subcontractors in Vietnam to avoid the high tariffs that were placed under the first Trump administration. This happened for a lot of different goods, and altogether you saw the U.S. trade deficit with Vietnam growing. You will be like playing whack-a-mole. You will try to close the deficit on one country, and it will just pop up for another country.
Trade experts say that implementing reciprocal tariffs will be logistically complicated because there are thousands of items that are affected by tariffs, and the U.S. has nearly 200 trading partners. Some economists argue that reciprocity doesn't make sense as industrial policy.
Whatever they're charging, we're charging. Very simple.
What it does is it gives other countries the right to set our tariff rates. So if another country wants to protect something that we don't feel we need protection, something that we're really good at, we adopt their tariff rate because we retaliate against them if they won't lower their tariff rate.
Many countries already have lower rates than the U.S., and it's unclear whether Trump's plan involves lowering rates too. Trump has also said he wants to use reciprocal tariffs to target the European Union's value-added tax, which is similar to a sales tax.
They have a 20% VAT tax, which we're considering to be similar or the same as the tariff.
The U.S. auto industry has been getting hammered and hemorrhaging jobs for so long. It is massively unfair treatment, and the president's making clear that we are going to pursue a policy of reciprocity.
This reciprocal tariff plan is just another example of Trump's far-reaching protectionist agenda.
I think there's two possible outcomes. One is the rest of the world then says, okay, it's a free-for-all, we all going to raise our tariffs. But there's an alternative path, and it's one that is actually more likely than a lot of people might think, which is that the rest of the world says, okay, the U.S. is going its own way. We don't think that that is enhancing to our economies, and we will band together. Basically, it will isolate the United States.
Judged by your peers, here's how the markets feel about Donald Trump, right? About the tariffs. We're going to talk about it a little bit. President Trump is handling of the economy. 44% say they approve, 54% say they disapprove. This came in. All right, President Trump's efforts on trades and tariff. 41% say the right change, 38% say the wrong change, and 18% say no change. Tariffs will be inflationatory, meaning it's going to make inflation go up. 78% of people said yes. Is it bad for growth? 88% of people said yes. Negative for unemployment. 75% of the people said yes. We need to understand something, right? One of the things we need to understand is what is a VAT tax. So we see them talking about that, right? A VAT tax. You never heard about it? It's a value-added tax. All right, so let's talk about that. It's a value-added tax. So Europe is killing us with the VAT tax. So when we look at a VAT tax, it is goods and services levied at each stage of the supply chain. So at each stage of the supply chain, there's a tax that's added. Europe does that. I'm not gonna lie, Europe whooping our butt with that. They use it actually as a tariff under another name, right? And it actually deals with the cost of production of the goods and the point of sale of a good. So they kind of hit you on it a couple times, right? Which is why it costs so much for American cars up in Europe, but it don't cost that much to get European cars up in here. So one of the things I will say that Trump said was, yo, we gonna start taxing. Bro said, hey, we gonna put a tax on the Mercedes-Benz dealership. I said, oh, them G-Wagons gone. Yeah. You start hey, I'm gonna tell you something, you start taxing the Mercedes-Benz, it starts to be a problem. People start tripping. One thing about Americans, they love their little Benz. Listen to me. When you first was coming up, it was two things, bro. A Benz or a Beamer. Oh. You got that Benz, you thought you were big dog. Tariffs are gonna be a thing. So here's what we're talking about April 2nd, right? April 2nd, so if you don't know what a recession is when GDP declines by 2 quarters in a row. 2 quarters in a row. So if you have back-to-back negative growth in the economy, that is called a recession, right? You can't just base it off of whatever you want. You gotta base something. Now, here's the crazy part about it. When Trump was in office the first time, was it Trump? Yeah, it was Trump. Was it Trump? We were in a recession, and then they renamed it something else. They was like, no, it's not a recession. But like, yo, we had 2 back-to-back quarters. Like, no. Technically, no. Technically, this is a recession. You can't rename it. So that was the first time he was in office. We was in a recession, but he said no. And from that point on, I said, hey, we in a recession, and that's what they call it. Now, here's what we will say. So Trump came back and said, hey, check this out. So I put that up there called Judge by Your Peers for a reason. Here's why. Once the business owners started, so here's the thing, I don't care who you is, and I could be wrong. I don't care who you is, you gotta always remember, America is a what? Business. It's a corporation. He said, Friday, I got a lot of calls from a lot of business owners, and he said, how they talking about the tariffs and how they talking about it. So he came out and said, hey, check this out. We not gonna have tariffs on everybody. We gonna be a little lenient, and we gonna be willing to make some deals. When he said that, the market said, ah! The market ran. Here's the thing about the market. And I always say this, and people be thinking I'm wrong, and that's cool. Here's the thing about the market. The market does not want to go down. What do you call it when something doesn't want to do that by nature? It's a word for it. It's against the nature of the market for it to want to be negative. Now, it happens. It happens. But the market naturally wants to do what? Buy, go up. Why? Because America is a consumer economy. Not only that, but people are led by what? Greed, emotion, reluctant. Come on, Sean! Heavy on a reluctancy. Right? So the market reluctantly goes negative. Why? Because it doesn't have footing. It doesn't have enough to make it say, yo, this is what I want to do. So when we go through that, the market decides to do what? Go negative. But watch this. In those moments where the market gets a piece of good information, it goes positive. It goes positive. So all he simply said was, the tariffs might not be widespread. They're going to be more targeted. The tariffs are going to be more targeted. The market said, oh, okay, bet. Kind of got a running market, right? And so April 2nd is the day, so the market is optimistic right now going into that time. So April 2nd, what will happen is, and here's what I told my people in the Patreon. I say, listen, y'all, and come join the Patreon, y'all. I'm telling y'all, they talking crap up in that area. I love them, I ain't gonna lie. But here's what happened too, though. The market said, hey, and I told my people in the Patreon something, and it kind of worked out. I said, listen, the market, and Patreon, all my people in Patreon, tell me if I said this or tell me if I didn't say this, and y'all remember me saying this. I said, hey, y'all, I'm gonna be honest with y'all. The market really done got immune to this tariff talk.